Good Friday morning. Michael Hawker here with Reliance Financial Group with your Halktalk Mortgage Minute or Four. I want to talk about a hot topic today: reverse mortgages. What are they? There's a lot of skepticism when you hear the term reverse mortgage, and there's some there were some bad predatory practices in the past with reverse mortgages, and people think that it's a program designed to take to prey on old people and take their houses away, basically. And that really isn't the case. You really have to understand what a reverse mortgage, how to say it, first of all, what a reverse mortgage is, what's good about it, what's bad about it, and is it right for you? And you need to talk to somebody that can kind of walk you through the ins and outs. But I'm going to give you a very, very basic example of what a reverse mortgage is. Let's say in this example, you have a home. You need to have a good amount of equity in your home. Your home doesn't have to be completely paid off, but you need to have a good amount of equity in your home, and you have to be at least 62 years of age or older. There are some ways that a spouse who lives in the home who's younger can be a part of that, but for the easiest sake, 62 and older, you live in a home, you have a good amount of equity in the home. So let's say you have a $400,000 home and you owe $100,000 on it. You're near or at retirement age, and you still have a healthy payment on that home. Maybe it's $1,000, maybe it's $1,500 a month, and you would like to possibly not have that payment anymore. So here's an example of how a reverse mortgage works. The investor or the bank or the lender comes along. Let's say I'm the investor or the bank, and I come along and I say, okay, I do an analysis and I see that you have a good amount of equity in your home, and you owe about $100,000 on the home. How about if I give you $100,000 and pay your existing mortgage off, and I hold the note on the home just like any other lender does? I have a lien on the title. You're still on the title to your home. You still own your home. The new lender, myself or the investor, whoever it is, comes in, gives you $100,000, pays off that mortgage, and now owns the note. You don't have a payment anymore. You don't have a payment for the rest of your life if you live in that home for the rest of your life. And what happens with that $100,000 is every month there will be an interest rate, and it's just like having a loan out from any bank. It will accumulate monthly interest on that amount, and the calculations are done assuming that you'll live to 100 years of age. And if you live longer, then you beat the bank, so to speak. But most people aren't going to live to 100 years of age. So that interest will accumulate every single month. And then when you unfortunately pass away and the house now is part of an estate and needs to be settled, the balance is owed to that lender that gave you the reverse mortgage and paid your home off for you and left you with no payment to make. Now the estate does whatever it intends to do with the house. If they choose to just sell the house, they sell it. And let's say at that time there's $175,000 that is accumulated because you borrowed $100,000, which paid the home off, and you lived for 15, 18, 20 years, and it accumulated a bunch of interest and just fictitious numbers. Now you owe $175,000 on this mortgage. Your family or the estate will sell the home. They'll satisfy what's owed to that lender, and then they keep the rest of the cash. So it's a way for some people use this as a retirement plan. There are certain ways to take a reverse mortgage and structure it. If there's enough equity and everything's done in a certain way, you could actually turn your home into an income stream where you get a monthly check of income paying you versus you paying a mortgage to the bank. And it's all about tapping into the equity that's in the home, and that turns into dollars, either freeing you up from making a payment or providing a residual income to you. And it simply accumulates that interest over the years until you pass away. And there's some stipulations. You have to make sure your taxes and insurance are always paid on time. You can't default on that. And if you do, they don't take your home. They simply will say, okay, you're defaulting on your insurance and your taxes, so we're going to call the note due. At that point, you'll simply have one of two choices. You can either sell the house if you plan to move anyway. More than likely you won't. Or you can refinance the home and pay that reverse mortgage lender off, and now you're back to having a mortgage. So I'm sure if not having a mortgage payment is freeing you up and giving you a comfortable lifestyle, there shouldn't be any issue paying your taxes and insurance. And all of those calculations are going to be verified to ensure that you can maintain the basic expenses of the house so the bank doesn't have a big enough risk factor that they won't approve you for the reverse mortgage. There's so much more to discuss. There's so many what ifs that come up when talking about reverse mortgages. So if you want to know more, contact me. My contact information is here, there, everywhere, wherever I ultimately edit it into this video. Give me a call, 248-379-4232. And I can answer all your questions that you have about reverse mortgages. You know, are they right for you? Are you a senior? Are you looking into it? Is it potentially right for your parents or your grandparents who may be struggling? And it's not a solution for people who are massively financially struggling, because it could just put them in a worse situation. And you certainly need to know all the ins and outs and the costs involved in getting into a reverse mortgage. And that's what we do. We talk about the good, the bad. I don't sell mortgages. I simply provide information. I provide facts and the good and the bad, and let you decide if it's the right product for you. So give me a call, and would love to have the opportunity to discuss this and let you know more about reverse mortgages. Thank you.